Welcome to the Salmon Runs YouTube. Enjoy the video.
In this video, I will explain how to use an LLC to reduce taxes. An LLC, or limited liability company, offers significant tax advantages for many small businesses. It allows for pass-through taxation, meaning profits and losses are reported on the owner's personal tax return, avoiding the double taxation often associated with traditional corporations. This structure can simplify your tax obligations and potentially lower your overall tax burden. With pass-through taxation, your LLC's profits and losses are directly reported on your personal income tax return. This means the business itself doesn't pay corporate income tax, which can be as high as 21%. Instead, you pay taxes at your individual rate. However, remember that owners are generally responsible for self-employment taxes on their share of the business's earnings. One of the great benefits of an LLC is the ability to deduct a wide range of ordinary and necessary business expenses. This includes costs like office rent, utilities, business supplies, and even employee salaries. If you use a portion of your home exclusively for business, you might also qualify for a home office deduction, further reducing your taxable income. Keep good records for all your expenses. For even greater tax savings, an LLC can elect to be taxed as an S-corporation. This strategic move can significantly reduce your self-employment tax burden. As an S-corp, you can pay yourself a reasonable salary, subject to payroll taxes, and then take the remaining profits as distributions. These distributions are generally not subject to self-employment taxes, offering a substantial advantage for many business owners.
Thanks for watching. Consider subscribing if we helped you.